Welcome to the ITC Tax Podcast, where we cut through the complexity of taxes and help businesses plan smarter, save money, and stay ahead.
Hello, everyone. Welcome back to the ITC Strategic Podcast. Myself, Stephen Shaw, and Mark Dzeda. Today, we'll be talking about common pitfalls. So just kind of jumping in, Mark, what common mistakes do we see out there with property owners with regards to property tax and maybe even sales and use tax? And, as we say, common pitfalls that they fall into when dealing with these taxes.
I'd say, thank you, Stephen.
Yep.
For introduction. I'd say probably the most important or the most glaring pitfall that one would see for data centers would be the fact that people do not control the narrative. People are allowing information to get out and not containing what information is being distributed to the public. They lose opportunities by letting the information get out in the community, getting in the press. And by then, once it's out, it's too late to recall it. So I think the biggest pitfall is not getting ahead of the game, not applying for incentives early, not approaching the communities, and maybe allowing PR departments, the press, whatever, to pick up on numbers, jobs, and actually doing your job, doing the company's job, broadcasting the numbers, but from a different vantage point. They're basically almost broadcasting the value that you're going to be paying tax on, which actually may not even be a realistic number to begin with, let alone the value that it might be or the tax that it might be if a company were taking a proactive approach.
I would add that, to your point, not starting early enough, already having a site selection, almost breaking ground, and then realizing, oh, what are we going to do about abatements and incentives? Sometimes that could be a very big hindrance in actually achieving those abatements and incentives. If you do it quick enough, maybe you can get past it. But if they realize you're already there, you've made a decision to be there, then they're less likely to grant those abatements and incentives, whether you qualify or not, because now you've lost that competitive edge, right? There's no other locations that you're looking at, so there's no competition for you to go anywhere else other than where you already are. Would you agree?
I would agree. I think also timing is important when one considers what laws are in effect. I mean, several years ago, Texas had what was called the Chapter 313 tax abatement agreements for the local independent school districts, or ISD, with the comptroller's office. Well, the law expired and there was a mad run to get all these Chapter 313 agreements in. Well, then the next legislature comes along and they pass what's called the Dzeda law, which is more restrictive. It doesn't allow it for certain types of property, say solar, wind. It specifically excludes types of property. But, depending upon where you are, you want to make sure you qualify for whatever incentives are available.
Yeah.
Because like I said, it's a moving target. And then also, even working within the law, we saw where some people were fortunate enough to actually spread out the agreements to make them multi-agreements as opposed to just one agreement. So they weren't hindered by maybe having to commit to the value or the project early on and maybe lose some of the benefit of the tax abatement or tax incentives. Yeah. So, always know the law, make sure that I would say, even look at legally that you make sure you want to be on the forefront. You want to be driving the bus. You don't want to be the passenger. Right. You want to make sure that you obtain the maximum benefit possible and get that competitive edge that is necessary really to make these projects a great investment.
Right. In the bus in the sense of control of the narrative. So, that's incentives and abatements, but, common pitfalls that we see a lot of times is just know the state that you're working in. And that's in regards to property tax in general. Because if you're used to, filing in one particular state that wants more information to another state, if you're giving that same amount of information to this other state, i.e. Texas, Louisiana, states like that, don't ask for the same details, then you're handing to the state or your local jurisdictions, counties, if you will, too much information. And we see those kind of pitfalls there. is that too much information is handed over with the filing rendition. And so the counties aren't going to dig through your information and pull out what's taxable and keep what's taxable, or pull out what's non-taxable, and keep what's taxable. They're just going to take the full amount, right? So know the state that you're working in. That would be a common pitfall. And also know the information that you're providing. Understand what's taxable and understand what's not taxable within that state that you're filing in. Also another common pitfall that we see. It's manageable in the sense, but to one of your points on another podcast, once they see a value and have their hand on it, it's hard for them to let go. But there's ways around it that we could help with, right? Don't you?
We've
seen it. Yeah.
There are, I think, even within the same state, like number one, Texas doesn't have audit powers. However, if you get some sort of an economic development foundation or some sort of a city or other group, you're getting some sort of a cash money sent to you. Sometimes you have to open up all your books and give them all the costs and give them actual salaries and give them a super amount of information. And sometimes, is it really worth opening up, sharing all this information when that may not have actually gone into your value to begin with?
Yeah.
And also, there different counties or different states are easy. Some are easier to work with than others.
Yeah.
Some of them, they'll fight you tooth and nail over everything. From a toothpick to a Mercedes. Whereas other ones are much more easy to work with. They want your investment. So even when you look at just dealing with different counties, some of them are much more taxpayer friendly. Other ones add a lot more scrutiny. Other times you'll see some that if you're in a rural community, your threshold to get the incentives are much smaller than, say, if you're in a big urban community. Say in this case, like Houston or Harris County, the threshold here is going to be a lot more than if you were in a small county.
Yeah.
So that's something else to consider as well.
Yeah, knowing your location, like you said, even in the same state, some counties are a little more or less willing to work with the property owner than some of your other counties. And so knowing that as you find a location that you want to either start your business, build your facility, knowing the local willingness of the counties to work with you and bring you in as a new corporate citizen, how that compares even within the same state. And then also, like you said, outside of the state, in other states, might be a surrounding state, Oklahoma, Louisiana, wherever that might be, knowing how they look at new business and how they're willing to work with you to entice you to build in their local community. So in regards to these pitfalls and some of that's something that we help our clients and potential clients with in a lot of ways, helping them with that due diligence of looking at the property tax impact of what that might look like, so they can do their due diligence on their end of what the overall revenue impact might look like with regards to property tax. So something we can help with and help on a regular basis our current clients and potential clients.
Yeah, I think it's important to realize that a company like ITC Tax is a great asset when you're looking at expanding or building a new plant, or a data center, because we can operate as a third party, undisclosed. We'll sign a non-disclosure agreement with the taxpayer or the owner, and so we can pursue the abatement incentives, and yet nobody in the community will probably know who the prospect is, and we can maintain that independence, and so people won't approach the company. It won't get out in the press. It enables you to obtain larger incentives if we're able to do that.
So thanks everybody again for joining us on our podcast today, discussing common pitfalls. I hope to see you again. Have a good day. Thanks, Mark.
Thank you so much.
Yep. Goodbye.